All right, so let's talk about trading errors. Okay, you know, errors like not following your rules. Okay, not following your rules. Um, you know, removing your stop loss, removing SL, remove your stop loss, not taking profit. Okay, TP, not taking TP, entering too late. You wait. The situation whereby you enter a trade too late, or jumping in too early. Okay, too early. Okay, there are several other trading errors, but let's just focus on these few trading errors, right? All these trading errors results from one thing, right? The root of all these errors is number one is always thinking you know what will happen next when you are trading. Okay, thinking you know what will happen next, right? Thinking you know the outcome of each trade. Okay, remember we've always been talking about this. Okay, this is the problem that all traders face. Okay, thinking you have to know what will happen next, or thinking you know exactly what will happen next in order to make money. You don't need to know what will happen next to make money, and you can't even know what will happen next to make money because you are not the one who moves the market. Okay, you don't have the financial capability to move the market. Okay, so there's no way for you to move it. So if you can't move the market, then what is the point thinking you know what will happen next? Okay, so all these issues stems from thinking and you guys will I know some of you guys will be like, oh, you are saying the same thing over and over again. Okay, yes, because that's exactly what you need to succeed as a trader. Okay, if you can't remove your focus from thinking you know what will happen next, okay, or thinking in terms of outcome, there's no way to become profitable as a trader. Okay, and I will explain that just now. Okay, so let's take the first mistake, like not following your rules, right? Not following your rules. In a situation whereby your rule, let's say your strategy says, let's take a simple strategy just to illustrate this. Let's say your strategy says buy at the fourth touch. Okay, this is 1, 2, 3. This is the fourth touch, right? Let's say your strategy says, okay, this is a trend line. Okay, let's say your strategy says buy every time you see the fourth touch of this trend line. Just buy. Okay, or sell at the fourth touch of every trend line. Okay, now let's say, for example, okay, buy the fourth. Okay, let's say the strategy says buy only the third and fourth touches of the trend line. Okay, now let's say something like this now happens. You see the first touch. This is the first touch, number one. This is the second touch here. It does the third one, does the fourth one, then does the fifth one. Okay, this is 2, 3, 4, then this is the fifth one, right? Now traders, the only reason why you will enter this fifth touch, okay, whereby your rule says only trade third and fourth touch, there's no point taking this fifth one because there's no edge there. Okay, meaning if I take 30 of this type, of this fifth touch, I'm going to lose money. Okay, so why should you take that trade? The only reason why you will jump into that trade is because you think you know what will happen next. So now you are not following your rules because you think you know what will happen next. Remember what I said. Thinking you know what will happen next is the root of all trading errors. Okay, so assuming you know that nobody knows what will happen next, why should you enter that trade when you have no edge? You know that if I take this trade 30 times, meaning there's no expectancy, this is a negative expectancy trade. Okay, So if you take this trade 30 times, you are going to lose money. Okay, so what is the point taking that trade in the first place? You understand? So all the errors stems from thinking you know what will happen next. Okay, let's take the second error again. Removing your SL. Okay, removing your stop loss. Okay, so let's let's say for example your setup already occurred, right? This is the first, this is the first, this is the second, this is the third touch, right? You're supposed to buy here. You bought there, put your SL there, and you put your TP all the way up there, right? Now what traders will do is once the market goes up a little bit, maybe close to the TP, comes down, plays around, the market plays around, and close to your stop loss now, all of a sudden they remove it because they think they know what will happen next. They think assuming you don't know what will happen next, you know that anything can happen, right? It can just go one pip close to your stop loss without hitting it and then go up, right? Anything can happen. It can do anything. It can do this, close your, just come back to your entry, then go back up to your TP. Okay, so assuming you don't have that mindset of I know what will happen next, I know it will hit my stop loss, there's no point removing this stop loss. So can you see how thinking you know what will happen next is what will guarantee you will fail as a trader? Okay, let's take the next one again. Okay, I'm going to take it one by one so that you guys will see why I keep repeating. Thinking you will know what will happen next is a big problem when you are trading. Okay, let's take the next one, which is not putting a stop loss, a take profit. Okay, not putting TP. Okay, not setting your target. So let's say 1, 2, third touch. This is 1, 2, 3. Let's still come back with it again. 1, 2. Okay, 1, 2, 3. Okay, there's the fourth touch. Okay, so you are supposed to buy there, right? So you bought. Let's say you bought. Put your entry there. Put your SL down there. Put your SL down there, and your take profit is up there, right? So what happens is, let's say for example, the past 3 trades, okay, the past consecutive 3 trades that you took, the market did five times what you risk. Okay, the market did 5x for the past let's say the past 3 trades that I took. The market did 5 times your risk. So what traders will do is, now their rule says take profit at 3 times your risk, right? For the fact that they discovered that the past 3 trades went 5 times my risk. So what are they going to do on this trade? Once the market starts going close, maybe it goes fast, close to the 3 times your target, then they will remove their TP because they think this one as well will do 5 times your risk, because now you are thinking you know what will happen next. You think the market will do 5 times your risk, so you remove your target. So at that point, it does 3 times your risk, comes back, hits your stop loss. Now you've lost the trade that should have been a profitable trade. So this is when traders now revert to trading randomly. Okay, so they might start taking a sell here, entering trades that is not in their plan. That is when when they get when you get angry, you can start taking trades that is not even in your plan in the first place. Okay, now that is another trading error, right? Not taking your profit because you think you know what will happen next. Okay, let's take another one, which is entering too early. Okay, entering too early, a situation whereby your setup has not already formed yet. Okay, so let's say for the past let's say 2 to 3 trades, right? For the past 2 to 3 trades, the market has been doing that. It goes up, comes close to this place, then all of a sudden it goes up, boom, that way without hitting your trend line. Okay, it does that the first time, does that the second time again, it does that the second time again. Okay, gets there, just close to your line, then goes up, boom. Then this third one, this is the third time now. Guess what a trader would do? The third time. This is not in their rule, right? This, why are they even observing this? I don't know, right? Why are they observing something that's not in their plan? Okay, because one thing is, if you take a trade here, okay, if you take this trade, if you take this trade 30 times, you will lose money. So this trade has no edge. It has no edge. So what is the point thinking? Okay, so let's forget about that first. Look at what the trader will do when the market is about to do the same thing the third time again. Okay, it's about to do this, make this same move the third time now. This is what will happen. This is what will happen right now. So the market gets close to the entry again, then they jump in. That is the third time now. You know, it's happened 2 to 2. Okay, let's say this is the fourth time. Okay, it happened 3 times that the market didn't get to the trend line before zooming up. Okay, now the fourth time, what they will do, once it gets close to the trend line, they will jump in and buy. Okay, so they will jump in and buy here with a stop loss down there. Normally, if they have waited, okay, if it is stop loss here, normally if they have waited for the line to get to the market, for the market to get to their line, the stop loss would have been down here. Okay, so inevitably now market does this, market goes down, hits the stop loss, then does this. Okay, what do you think traders feel at that point? It hits the stop loss. Assuming they've waited for the market to come their way, they will have taken that trade, put a stop loss at the best area, and there. But this is what happens now. They lost on that trade. Okay, so this is another trading error, because you think you know what will happen next. You are thinking based on outcome. You're thinking based on you are not following your plan. You are looking at the previous few trades, how the previous few trades played out. Because like I said, you cannot judge your strategy from 2 to 3 trades. Okay, you need like 30 samples before you will tell that this strategy works. So if you are using 3 previous trades to judge what will happen next on this trade, definitely you are committing an error. Okay, so you jumped in here because you think you know what will happen next. You know the market will still go up that way, right? So that is another trading error that traders commit, because they think they know what will happen next. All errors occurs because you think you know what will happen next. Okay, let's take another one. Entering too late. Entering too late, when you situation whereby the trade has already set up. Okay, let's say the previous 2 to 3 trades again. Let's take the example again. 2 to 3 previous 2 to 3 trades. The market has been doing this, goes up, okay, comes back, you enter there, you put your entry here, market goes up a little bit your way, then hits your stop loss. It does this the first time, does it the second time, does it the third time. Okay, now the fourth time, now let's say this is the fourth time, market goes up, goes down. Now the trader is hesitating. It's like, I think I know what this market is going to do. It's going to go up again a little bit and hit my stop loss. Okay, so they won't enter. Okay, so when the market does this now, goes up very fast, now they are jumping in too late. They jump in here, enter here with a stop loss there, the stop loss somewhere here, and before you know, market retraces, hits the stop loss before zooming up. Okay, the reason why they didn't enter here is because they think they know what will happen next. They think this is not going to happen. They think what happened in the previous 2 to 3 trades is going to play out again, because they think they know what will happen next. Okay, so thinking you know what will happen next is what will guarantee you fail as a trader. Trading is one of the only professions whereby you are trading not because you think you know what will happen next. You are just trading because there is an edge there. edge does not mean that they do not hit your stop loss. They can be edge there, and look, let me take for example now. You can see the most perfect trend line, okay, right? The most market goes up, comes down, goes up again, comes down again. This is the most perfect trend line, right? 1, 2, 3. This is third touch. Okay, now you can see this is very perfect, right? You enter there, the market can hit your stop loss 10 times in a row, even though it's perfect. And this is why trading is very hard, because trading is the only profession whereby you get punished for doing the right thing. So you get punished in all aspects of life. When since you were born, or since you started, you had consciousness, you've always been rewarded for, when you do something right, you are rewarded, right? You are rewarded you are rewarded for good deed. Okay, when you do something good, you have positive feedback. Okay, like you get good, you do well in school, you get good grades, you behave well at home, you get they acknowledge that, right, in a positive way. When you do something bad, or when you go to school and you don't study, you do something bad, you get bad feedback immediately, poor feedback. But trading is the only profession whereby even if you do the right things, you can get punished. You understand? You can get negative feedback immediately. Okay? And that is why it's very hard, right? You can do the right thing 10 times and you get 10 losses in a row. Those 10 losses in a row does not mean that there's no edge. That's just how the market is. There's no way to predict the outcome of each trade, okay? That is why I created a video. If you check most of our videos, there's a video I created that says how to have 100% win rate. What you don't know is even you had a loss here. Actually, in reality, you made a profit on each trade you place. And if you don't know how that works, go and check that video, 100% win rate video. You understand why you are not supposed to be focusing on the outcome. You are not supposed to be focused on this thing. Just like owning a casino, and you always focusing on, you are the owner of the casino, right? But you're always focusing on people who are gambling in the casino. You are like, oh, they made a loss, oh, they made a profit. That's none of your business. Okay, your business is just to focus on managing the risk, making sure that those wins or losses that they are making is not going to kill your business, right? You just manage the risk and keep doing the same thing since you have an edge. You understand? So that's exactly how trading is. Okay, so let's take the next one. Revenge trading. Okay, revenge trading is actually an after effect of all these things that we've mentioned. So if you don't follow your rules and the market end up going your way, you start revenge trading. Okay, but all these problems, all these errors, okay, or how will I call it, all these errors starts from one thing. Okay, one thing. Okay, that is thinking you know what will happen next. Okay, once you are able to disconnect from thinking you know what will happen next to just trading because you have an edge. Okay, when you disconnect from these two, this is the first one, thinking you know what will happen next, and only trading because you have an edge, everything changes. Okay, what does edge mean? Edge means, let's say you have there's another video I created on expectancy, right? Let's say you have a 0.2R expectancy. What this 0.2R means is that if you follow your rules, each time you click your button buy or sell, you are going to make 0.2R. Okay, so let's say after 100 trades you will make 100 times 0.2R, which is 20R. Okay, if your edge, this is a small edge, right? This is a small edge. There are edges that will give you 0.8R. Okay, So it's 0.8 hours. So if you place 100 trades, 100 multiplied by 0.8 will give you 80 hours, right? So you make 80 times everything you risk after 100 trades. So once you stop focusing on outcome. I personally believe that those outcomes, those profit and losses, okay, let me show you guys something now, something that is very interesting right now. I believe that you know when you place a trade, right? Let's say this is the trend line, right? You place a buy here, it goes your way, hits your TP, you make maybe $100. I believe that this thing was set to make sure that you fail as a trader. It was set to make sure you fail as a trader, because let's say your edge, let's say you were risking just let's say you were risking just 30 pips, $30 on this trade, right? And let's say your edge is 0.1 hour. What you actually made on this trade is 0.1 times 30. Okay, so let's calculate that now. 0.1 times 30 is 3. Okay, let's say your edge, okay, 0.1 is a very small edge, right? Let's say 0.8 r is your edge. Okay, if you multiply 0.8 by 30, that will give you 24 $24. $24 is what you actually made on this trade, but the broker will display $100, okay, to confuse you, okay, so that you'll be focusing on this 100. Oh, I made $100. What you actually made on each trade is $24. If your edge is 0.8 r, what you make on each trade is $24. So again, there's another trade where you take, and maybe let's take for example another trade again. Let's take another trade again. The same thing, of course. You buy here. Okay, you put your SL down there. Okay, and okay, market does this. You buy. Market does it. Go down. Hit your stop loss of what? Your stop loss of $30, right? Your broker will display minus $30. Okay, but in reality, if your edge is 0.8 r, what this thing means is that even though you hit, your broker is showing you 0.3 minus $30 loss, you actually made profit on this because you have an edge. Okay, 0.8 multiplied by $30 will give you 24 again. What you made on this is $24. So assuming this is what they display instead of this loss, everybody will be trading correctly, whether I hit stop loss or take profit. Assuming they always display your expectancy results instead of your real outcome, everybody will be making money. This is just like you know how it is. When you focus on the outcome, you are guaranteed to fail because you are being shown the wrong feedback for what you are doing. Okay, so that is it, guys. I think we are going to stop here. The video is getting too long, and we're going to continue in the next one. Okay, so if you like this kind of content, you can just click on the like button and subscribe. Okay, yeah.